So imagine you bought Michael Orr's house and he just all of a sudden got blindsided because there was a huge fire inside of his kitchen. This is what we're talking about when we talk about the 80% rule with home insurance. So if he had picked the 80% rule, he would have lost hundreds of thousands of dollars on his home policy. That's where you're going to see some of these insurance companies are going to offer you an 80% rule, which I don't necessarily recommend that you take. For those of you that don't understand what the 80% rule is, let's dive in and let's figure out exactly if it's a fit for you and if there's any companies that will even offer this to you. So let's go back to the example of Michael Orr's house when he was blindsided with this fire, right? His home, he actually just recently bought a $1.3 million home, and this house is insured to the max. What most companies will say is you have to have full replacement cost. That's full replacement value. Essentially what that's saying is if you have your whole house burned down tomorrow, how much would it cost a person today to buy the wood, to buy the lumber, to construct the home, to take the debris away, and essentially cover your home so you're back whole? If you do the 80% rule, what they're saying is that you can offer only 80% where you don't have to pay as much in your premium and you save hundreds, if not a couple $1,000s on the cost of your home insurance.
Okay, before we get started, a couple things I'd like to go over in the budget.
Now, essentially what you're doing is you're trading the risk, or you're trading your own insurance or co-insuring your policy so that you're actually covering part of that claim. Let's do some math. So let's say, including the property value, the home was worth $1.3 million to rebuild. That's how much it costs to rebuild the whole structure. And he had $1 million worth of insurance. That's typically allowed with some insurance companies. So he's actually under $300,000. But you would expect, since he only has a $350,000 claim, that it's covered. Essentially, not exactly. See, the 80% rule means that it's covered based on the difference between what the home replacement cost is and what the cost of the actual claim was.
I want to ask a question if I'm you, because there's 300 grand on the table of losses.
Like I said, let's do the numbers. So I did some math here, and essentially if he had the 80% rule and the house was a $1.3 million replacement value, if he only covered $1 million on this home, which actually that's pretty close to what his actual house is, then if he had a $350,000 claim, he would only be covered for $269,231. That essentially leaves him with an $80,771 bill. Now, can Michael Orr pay for that? Probably, but he's not going to be happy. That's almost a Corvette. So having one less Corvette or one less thing on your home policy is not necessarily fun when you could have just paid an extra, let's say $1,000 a month or $1,000 a year and had that home policy covered completely. Now, there's another coverage called full replacement or extended replacement cost, and that's in addition, that's actually the opposite of this. So where that 80% value says, okay, we're only going to cover 20% less, this says I want to cover 20% more. And why you would do that is because of inflation. So inflation isn't something that's typically covered on a home policy unless you endorse it. Some companies are allowing you to do an endorsement policy. So if you want to cover more than the house in case the replacement cost of the wood, the lumber, the roof, a lot of this has recently gone up about 15 to 30% for materials. That's why you're seeing a lot of these home policies go up in replacement cost, essentially causing your home insurance to go up, which nobody likes. So Michael Orr's situation, being blindsided with that fire in his home, was just a total disaster. It essentially caused a huge uproar in the cost to replace or rebuild the kitchen for him. Let's be more practical. Let's take a home that's worth $500,000 and only insure it for 80%. That leaves us with a $400,000 insurance ability. Now, that insured amount for $400,000 is pretty cool. It saves us a couple $100s a year on insurance, and we're pretty happy campers. Now, if we have a $100,000 claim, we're actually only covered for $68,966-ish. That's leaving us with a gap of over $31,000. So how do you do this math? It's really simple. If you take the cost of the insurance, whatever the insurance company says the house has to be rebuilt to, each insurance company decides that amount. They have a certain amount they filed with the state, and they know the cost of materials and the average replacement value of a home. Based on that, what we do is we take the difference between the two. So if we're insuring it for $400,000 and the house is essentially 80% of that $500,000, we divide the $400,000 by the $500,000. That leaves us with the percentage of coverage that the insurance is on the hook for and the percentage of the coverage that the insured or you is on the hook for. In this scenario, it's honestly not a good fit for most people, but it makes sense if you can't afford the insurance. If you can find a company that will offer this, the downfall that you're going to find is that most companies don't offer this as a coverage. You have to have at least 100% insured to value. Now, you don't have to go above and beyond, which is what most people offer, is to have extended replacement cost, but you have to at least do the 100% with the majority of companies. What are some ways to avoid these costs? There's 4 pieces that you need to think of when you're looking at the type of insurance that you want to carry. The first thing that you should do is look at the value of the home. Have an inspector come out and appraise your house. Know what the replacement cost is ahead of time. It changes, so every year it makes sense to check with your agent. If your current agent isn't reaching out every year, then honestly, you probably have the wrong agent. At our agency, we try to reach out to our customers at least every renewal or every year to make sure, has anything changed? Have you done any additions to the house? Has the value gone down? And then we can lower the actual replacement cost. Do we have the right coverages, and so on and so forth? By the way, if you're looking for a new insurance company, I'll put a link in the description below. We work with over a dozen different carriers and may be able to find you a better deal without losing the coverage that you currently have. The second way is to know that whenever you make improvements to the house, any major improvements, that you should increase the value or the replacement cost of your home. You don't necessarily get to just say, oops, I forgot about it, because if the insurance company goes to file a claim and they find out that you've actually improved the home and that's extra costs and materials, the only person that's losing is going to be you, unfortunately. The third, I kind of already cheated and told you, is to review your policy annually. Just make sure that if anything's changed and happened, then know that ahead of time. Most people don't actually look at their insurance policy when their agent writes it. I'm as guilty as everybody else. When we write it, we base it off of what we know about the home. Sometimes the home doesn't always have the exact amounts correct. For example, one of our agents recently did a review with their customers and they found that they had an additional bathroom that they didn't actually have. So they were able to reduce that cost, and that brought some of that cost down so they didn't have to pay for something that wasn't theirs. Doing that annual review made all the difference. The fourth piece is to talk to your agent. Understand if that is worth it to do the 80% rule where you can insure less. To be honest with you, you probably should look more at the coverages that you're carrying as well as the deductibles if you're trying to get the cost down on your house policy. If you're wanting to learn more about the home policy, I have a Home Insurance 101 that goes more specific into those exact coverages. Otherwise, if you're just trying to get the cost down, we actually just made a video about how to lower the cost of your current policy. I'm Mark with Valor Insurance. We'll see you soon.